Hi, welcome back. You're still tuned into NSE Closing Bell and we're rolling live from the 17th Morgan Stanley Annual India Conference. And before the break, we spoke to one eternal optimist who's right here with us, Sanjay Shah, who's the co-head of Indian Equities. He said, don't worry about the market fall, just jump in lock, stock and barrel into this market. Sanjay, I forgot to wish you good afternoon because it's been quite a bad afternoon for the markets. But things look all hunky-dory here at the Morgan Stanley Conference. You've had 500 investors who've attended your conference. Is there any caution at all?
Well, obviously, the markets have not been behaving well. Some of the other markets, particularly China, Russia, Brazil, over the last few months have been going up, and Indian markets have been going down and underperforming the other markets. So there was a note of caution. There, in fact, is apprehension as investors attend the conference and go away. But I think there are some important indicators that they've picked up, especially signs from the government of India, particularly when the railways ministers presented, the coal secretary presented, some of the large corporates, when they spoke about the fact that things are finally starting to pick up a little bit again. So I think people go back much more comforted, and as compared to how they came in with a little bit more apprehension. So I think it's all going good. It will take probably some time for the markets to realize that and for the markets to turn around, because there's always going to be a lead and lag. And I think that's the phase that we are going through in the markets. But I wouldn't worry too much.
But Sanjay, what are the key questions being asked at the conference? Because I know as a house you've been bullish on Indian markets. Citizen is also bullish on Indian markets. You've given up 10% from the peak. What sort of questions or what are the apprehensions that these investors have towards India, or to put in more money at this level?
So the single most apprehension is when will the investment cycle pick up?
Okay.
Right? And a lot of questions back and forth to different people. It's all centered around. So we believe, in fact, looking at all the sessions in the conference, I think there are three aspects to the investment cycle picking up. One is the fact that the railway spending will start. Second is the defense spending will start, and there will be a lot of joint venture collaborations and offset clauses which will be executed, which will lead to a rise in orders for the Indian manufacturers. And the third is the fact that the state-owned enterprises in India, non-banking state-owned enterprises, they have a lot of cash, and they have started earnestly on the capital expenditure program. So each of these three legs will start picking up. I think what will happen is that the private sector capex will probably take some time to happen, but these are powerful trends that we can see happening and already in the reckoning.
But this would mean that the government has to spend, right? I believe the railway minister's session was a sellout session where there was a lot of investors. But the biggest question is when will the government spend and how much they can spend this year, because private sector capex is going to take some time, I believe. So what's the sense? Like you spoke to you had a lot of policy makers as well. What's the sense when you talk to them as to by when you think the real capex from the government will start?
So look, we have to define the government capex a little bit differently right now, right? All along, all these years, we thought that the government has to spend and the capex will pick up. The government is really focused on making sure that they do not indulge in fiscal profligacy. We have got enough tools for capital expenditure to happen even without the government going all out. The railways have a $140 billion capital expenditure plan for the next 5 years. And from the indications we got from the railways minister, the finances have been stitched up together. Right? Part of it is government grant, obviously, but a lot of it is through joint ventures and through partnership with the private parties. So that's happening. Defense, a lot of the multinationals want to set up shop out here, and the defense orders have started getting rolled out. So you're going to see a lot of that happen. The state-owned enterprises, yes, they are quasi-government, but they have the cash in their balances, so they will spend. So I don't think we should depend upon the central government and this concept of cooperative federalism to do all the spending. So I think a lot of it is getting delegated out, right? And that's what we should be focused on.
Okay, this market is obsessed with numbers, right? And as we speak, the Nifty has broken that 8,000 level. You were just saying that it's just a number, don't be spooked by it. But just in the near term, as we price in a lot of these negatives like earnings, monsoon weakness, etc., how much lower do you think the market could head before it heads higher?
Look, that's a challenging question to answer. Honestly, I don't think I have a crystal ball to forecast that. First of all, on monsoons, we don't know yet whether the monsoons are weak or not weak. I think it is just presumed. It is just presumed that the monsoons are weak. Remember, last year also the monsoons were delayed, and the weather patterns do sometimes lead to delays in monsoons. So first of all, we don't have an answer to that question, right? The second thing is that corporate profits to GDP are at the lowest level ever, and we've gone through one of the worst phases of earnings and corporate earnings this last quarter. So things probably don't get any worse from here on, and in fact, if anything, they start improving. I can't really answer how lower will it go, but if you had asked me, and you asked me before the interview began, will we see 9,000 before we see 7,000? I surely think so.
Oh, so it'll go to 9,000 first. You don't
Yes.
believe that 7,000 is coming anytime soon?
I would find it very difficult to believe that we're going to go down all the way to 7,000. I think there are enough good things happening in the markets, in the country, and with the corporate for markets to, at some point in time, find the stability and start moving higher.
Sanjay, the one question which lot of the market participants have been trying to figure it out as to what could be the next FII move, or the big question for this market is the fact that despite the fact that for the last 4 months the FIs have been net sellers, India is still a very overweight market in the Asia basket or in the GEM portfolio. In an event of a risk of how much risk that can be for Indian markets from a technical point of view, I understand from an earnings point of view and from fundamental point of view that may not be a big trigger, but from a positioning point of view, how much that you think could be the risk in the near term that the FIs are still very overweight India?
Look, the FIs, when they look at this so-called theoretical overweight and you look at the MSCI, the realization is that for the size of the Indian economy, $2 trillion, and for the size of the Indian market, $1.5 trillion, in terms of the MSCI weight, India is underrepresented. And why is India underrepresented? Because of the lower free float that exists in India as compared to most other countries. So this 250 basis points overweight, if you to right size it for the economy and to try and correct it for the free float, I don't think you'll come out with such a large overweight number. The second point to note is that we're going through different cycles, different troughs and different peaks in Indian markets, but we've really not seen the FI positioning in India change too much, because the FIs, when they invest in India, they're looking at the bottom of stories. The last thing technically is that a lot of the large caps are not in the MSCI because of the fact that the free float factor went down, and as the FI and the ADR and the GDR holdings are getting merged together, the FDI and the FI holdings, some of the stocks will come back into the MSCI, and to that extent the weightage of India in MSCI will go up, and to that extent again the overweight that we see will come down. So I don't think it's such an important factor at this point in time.
Okay. And how much will